The Satoshi alien will help you understand technology and cryptocurrency like Bitcoin and believe you like it. The Satoshi alien will help you understand investments and make money, so come listen to the aliens guidance. Listen to the
Here at Out of This World Podcast, we are not financial advisors. We cannot give financial advice. Everything we say is for entertainment and educational purposes only. Please do not follow anything we say. Do your own research and understand we cannot give financial advice. Thank you and enjoy the show.
Yeah, you remember Shalimar Diner?
Shalimar Diner? No.
Yeah, it's down by me. It's over on, they filmed Wolf of Wall Street there, one of the diner scenes.
Oh, okay. That's by Regal Park?
Yeah, exactly.
Yeah.
So they filmed it there. And then right before COVID happened, the guy, I guess, wanted to sell the business. Mm-hmm. And he wanted to sell it to like a real estate developer. But because of like the way the bylaws were in at the time, they weren't zoned for a property. They were zoned as like a restaurant only. So he gave them like this $10 million price for like the restaurant. It's like no one could officially buy it.
Oh, shit.
And like he made it to the point where like, after X amount of like days, then you can change, I guess, the bylaws or whatever. So he basically scammed the city of New York to sell it to a real estate developer to put condos there, you know, which is so messed up. But, you know, everyone scams in America, right? I mean, look at what's going on nowadays with Robinhood.
Yeah, right?
Yeah. I mean, steal from the poor, give it to the rich. God bless them.
Last time. Yeah, it's absolutely ridiculous, man. They literally just decided to change the rules while everything is going on. It's absolutely bananas. Like it's gross.
I mean, you know, listen, technically, then I don't think anything's going to happen because it's most likely in their terms of service that they can do whatever they want.
Oh, definitely.
But number one, that's incredibly immoral. And number two, they're looking to go public. I like fintech. That's one of my areas of, I hear about a new company, I explore it. I'm not investing in Robinhood just off principle alone. I think anyone that might have used Robinhood should move to Cash App, SoFi, or an adult broker like Schwab or Ameritrade, Thinkorswim, etc. Right? Robinhood.
Well,
is
you know what the issue is that like if you try to go to the Cash App, you can't transfer stuff from Robinhood to Cash App, right? And then Cash App doesn't support many stocks as Robinhood.
Yeah, and I think Cash App is common stock only. I believe. I don't think you can do options yet.
Yeah,
but
no, you can.
The one thing that I could say about Jack Dorsey and why I am back to owning Square again is that man is terrible at managing Twitter. But he does such a great job building out Square's infrastructure, building out Cash App, that they're going to start offering options trading in the near future. I guarantee it. It just might take 6 months or a year, but it's going to happen, right?
Yeah, no, definitely. I'm sure they're going to offer more stocks too. I see it too, man. I think that it's bigger than Robinhood and GameStop. I think it's bigger than retail getting into Tesla. You know, you have an establishment class of investors, and I would assume that most of them are boomers. Right? That's probably fair to say.
I would say the ones that are actually managing the portfolio, not the guys, the lieutenants underneath. Yeah, they're all 50 and over. Definitely. Exactly.
I actually have a friend, and she works for one of these banks, and she was telling me that most of her job now, since the pandemic, is helping these dudes log into their email. Yeah. These are the guys that are sitting there saying, "Oh, these kids traded Robinhood, traded GameStop." They're complaining. They're the same people who tell you that, "Oh, well, you know, when I was your age, I was able to get a house,
right?
Cars, buy my second house." Like, dude, you went to school for free. It was 10 grand.
Right.
Like, what are you talking about? This is a completely different situation right now. You know, and then they say we're entitled.
Right.
Like, dude, you've never even taken the time to learn how to check your email. You're in these positions at these banks and you don't know basic technology.
And that's why they have missed Bitcoin. That's why a lot of them are missing on tech, and they've been chasing tech the past like 2 years.
Yeah.
Like Warren Buffett. When did Buffett buy Apple? 5 years ago or whatever it was? 10 years ago, max? I mean, come on, man. This is supposed to be the Oracle of Omaha. It took the man 30 years to buy the greatest company in American history. Like, that's so ridiculous.
It's absolutely
because, like
ridiculous.
you said, old people don't see the present or the future.
No, I 100% agree. And it's not all of them. I mean, there's
no, of course not.
Adapted and done extremely well, but there is just this huge amount of them that they have a disdain for technology because they don't understand it. They're really afraid of it.
Yeah,
and you're really seeing this play out because I think it's more conflict between not even rich and poor. It's like digital natives versus analog establishment. And that's really what we're seeing play out between Tesla and now GameStop and now with Robinhood. I think this is really the war that we're seeing. And it doesn't really matter what they do because at the end of the day, they can cheat all they want. They could tell you, all right, we're going to limit your stocks. We're going to limit this. We're going to do that. We can change the rules on the fly. That's fine. But you're going to die. Like, these people are all going to die. They're all old as fuck. Guess who's going to inherit it? It's going to be us. We're going to do a better job.
I will say that. I think you're onto a point. My big gripe is when Wall Street smacks you down, you don't sit there and cry about market manipulation. You get back up and you play their game. And that's the one thing I think people need to learn, because what Robinhood did is wrong. What Citadel might have done is wrong. But we're not playing, Monopoly with our families. This is the big leagues. They're going to do shady stuff. They were using shady tactics the entire time of Robinhood. Right. And you got to fight dirty with it. And you know what? Wall Street Bets is trying to do that. And I commend them. I think they're stupid if they're going to let their profits go to zero.
Man. Dude, they're heroes. They're absolutely heroes. And I support them.
If they let their profits go to zero, that's foolish. If they're able to get out on top, I commend them and I respect that more than anything. And I can't wait for that movie.
But think about how many different timelines there are where we never got into investing, and now our first whole introduction to this world is Wall Street Bets.
Yeah.
Millions of people who are in our demographic right now.
Yeah.
Are we going to be entering like a different kind of paradigm? We already seen Citron now. They're not going to release new short reports.
You ever see the joke on Twitter? His name is Andrew Left because he's never right. The terrible dad joke. I love Citron. People, give him hell all the time. Citron burned my dad for $50,000 10 years ago on VoxelJet. Okay, my dad bought VoxelJet at $55, and he went in heavy because 3D printers were on fire, and then it went to like zero essentially. And ever since then, I paid attention to Citron. I don't care what people say. If he goes short, I exit because I don't need to deal with that headache, right?
Yeah.
I witnessed it firsthand.
Yeah. Now so how do you feel seeing this play out now? Seeing him take a huge loss and seeing him get a taste of his own medicine. How does that make you feel?
It's Wall Street, right? You make money, you're going to lose money. You deal with it. You don't cry about it. I think what Andrew and all the other...
I have to cry about it, but fuck that dude.
You know what? He made me money on Jumia, so I'm not going to complain, right? But no, what Andrew, his decision now is very interesting. His long picks have been very good, actually, in the past couple of months. He recommended Jumia at basically I think it was $8 or $13, and I bought it at $17. I got in a little late, but in reality, 17 versus 60. I got in very early, and I told you about it, and you bought some for your sister, and she did very well.
Yes.
He mentioned Star Peak, which hasn't run yet. He mentioned another one, XL, Fleet, which hasn't run yet. But I think those are all solid companies. I think what these short hitmen do is they put out a short release, hoping to drive down the price a little bit more so they can cover. And I think that's wrong inherently.
Yeah, of course.
And I'm glad he's no longer releasing those short pieces. But the one thing is, are you releasing a short because the stock is too expensive in your eyes, like he did with Palantir? Or are you releasing a short piece because the stock is a scam and you want to save people money, which he's done also?
Mm-hmm.
And I don't think we should ban him from releasing his positions on the short side if they're scams. I want him to still tell me if a company's a scam in his eyes, because that will help me out as an investor. I want to be unbiased. I want to see.
But then look what he was doing with GameStop, where literally you're in the midst of a pandemic. You have how many workers that were home not collecting a paycheck for so long.
Yeah.
He's trying to drive this thing to the ground. Like,
right. Like, here's the thing. If you put 50 grand into GameStop when it was like $4 a share and you bought calls, awesome. That, you know what? That's within your right? When GameStop goes up on its magical tear and you're up 10, 11 million, why wouldn't you peel off $2, $3, $4 million worth?
Because they don't know, man. They don't know. People don't realize. People think that I'm going to put money into this thing and then it's just going to keep going up. They don't. They want to get in after it pumps. It's the craziest thing to me.
I'm
like we were also in that mindset at one point.
Yes.
So, I mean, you got to keep that with you too.
Yes. And I talk about this all the time. I would have blown up my account completely. I would have lost all my money trying to trade this because of the swings. Number one, these are violent swings. But number two, I personally, when it went from 50 to 80, I thought that's pretty crazy. But this is probably done. Then it gapped up, opened over 100. I said, wow, how much further can this go? And then it kept going. So that got out of my control completely. And that's why I never took the trade, because I couldn't trade it. I didn't feel comfortable. I'll be honest with you. Right.
Yeah.
But
listen, I basically didn't do it either. I put enough money in that, when I see the candle years from now, I could be like, hey, I was part of that candle.
Right. But that's the thing, right? You don't have to make a lot of money trading major size. There's one thing I've always heard great traders say on a stock or a situation like this: less size, more range, right?
Yeah.
If you taking 5 or 10 shares helps you stay in the stock on a $20 swing down, and then it helps you capture a $200-$300 move up, who cares if it's 10 or 20 shares? You just made a great return, right?
Exactly.
When you're buying 1,000 or 2,000 or 5,000 shares, that $20 swing down is going to kill you, and you're going to panic.
And you know it's going to happen, right?
Yes.
Like, now, every single trade I go into, I'm like, all right, I'm going to, this is the amount I'm putting in, but also this is my reserve amount after it goes down.
Right.
That's immediately part of the plan now.
Right. Like, I bought Square yesterday, pre-market, right? I got in, I had 200 as my level, 201 as my level of interest. And pre-market, it was at that point. And I was feeling kind of bullish when I woke up yesterday. So I said, screw it, I'll buy a starter. And then I saw it kind of grinding up a little bit pre-market. So I added to my position. But I didn't go full size. I went half size because I wanted to be ready. I had 190 and 185 as levels of interest lower. And if we went down there, I didn't want to stop out because I like to trade long term. And I wanted to build a position lower if it goes lower, right? It didn't happen. But you know what? I was in the trade number one. And I actually added a little bit today on the dip to 216. And I still left room now. If we gap down one day, we're down 100 points in the NASDAQ, 200 points in the NASDAQ, and Square opens up at 190 or 195, I have room to still buy. And I'm going to still buy, right? Exactly. People need to know that process. Because if you go all in, all or nothing, it gets a lot harder to manage those big drawdowns.
100%. And that's when the emotions kick in. And that's when you're scared. It's bipolar. You have the greed and fear that both play out really quickly. This roller coaster. And if you're not used to it, it can take over and it can really cloud your judgment. Yeah.
I mean, look, I watched Teladoc go from 225, which is where I got the bulk of my buys in, all the way up to the 290 area. And now we're back to 255 today. Does that bother me or scare me? Not really. I don't care because I got a 10-year plan and I've been adding on the way down because I left room to add to buy more, right? I didn't buy the breakout because I like to buy the retest of the breakout point if it happens, right? Yes. And that's just my process. It doesn't always work, but sometimes I find that it's very helpful. So it came back and I added more. I bought a 265. I bought a little early. I got a little excited. I won't lie. I bought a 280, 265. Not the best buys, but they still fit my long-term plan.
Now, are you buying market or are you buying limit?
On Thinkorswim, I hit the ask because the option's right there. I can literally click the ask off of level 2, and that's awesome. With Schwab, their web platform kind of sucks. So if the stock is moving quickly, I might hit the market. I'll be honest with you. But if I feel like the stock is something that kind of chops around in a small range, tight spread, that kind of thing, I feel comfortable getting the limit. I might actually go above the ask actually. So if the ask is like 215.25, I might put in 215.50 just to make sure that I get the ask. I'm looking around and I'm talking to people and they're like, nah, I got to hold the line. I'm going to keep buying. I'm like, why? AMC, you bought at 20. It's now $12. Why are you buying more? When I buy Square 200, and if it goes down to 180, I buy more. It's because I said from the outgo, I want to buy at 180. And Square has a great future. AMC, what are you buying with AMC at $20 and then you're going to buy more at 12?
Listen, if you want to make a point, if you want to like stick it to the people and like, really get them, then absolutely go for it.
Yeah. Buy one share.
Your money to make money and your money to make a point is going to be two separate monies.
Right.
Make it the same pot.
Right. If I normally buy 100 shares to make money, I might buy 10 or one share to make a point.
Exactly. That's what I did.
Yeah.
Hey, man, sometimes you just want to look at that candle and be like, hey.
You want to have fun.
I was there. I was a part of holding that line.
Well, that's why.
I lost $200, but you know what? Hey, I was there.
Yeah. When those Bitcoin memes were coming out during COVID in like early April and March, when it was like, Dad, what'd you do in 2020 during COVID? And the dad says, bought more Bitcoin. And the kid's like, legend. I was like, yeah, I want to do this meme. I'm buying more freaking Bitcoin. I don't give a crap, But, you gotta do it with an asset that has a fundamental reason to go higher. You don't do it with an asset that's artificially being inflated by a short squeeze or a pump and dump scheme.
Exactly. And if you weren't thinking about AMC until you saw it on social media or until somebody told you about it, and now you're putting a significant amount of money, please don't do that.
Dude.
If it wasn't a part of your thought process at all, and now it is, throw a bone in there. Why not?
Dude,
not lose it all.
When GameStop last Friday went from, $50 to $100 or whatever it was, I tweeted, it's a $4 call out in March for AMC is like $1.50. It's probably a good lotto gamble. But I was too cheap to burn $150. And that
you burn it on hedges.
Right. I do it all the time on hedges, right? I got like $500 in hedges I'm burning left and right.
All right. So just to go back to hedges really quick, because we do this all the time where you're like, hey, I'm going to put on a hedge and you tell me what you're going to do. And I do it sometimes. And I've done it like 3-4 times. I've just lost like a few $100 every single time. And it's fine. But like, I'm like, why are we doing this? So the last time you did it, I was like, what? I ain't doing it.
Yeah. Well, here's the thing, right?
I can just ride it out.
Yeah. And that's the thing. I'm kind of a greedy person in terms of if the market's going to go down, I want to protect my positions from going red and not making any money off them. Because for me, visually, if I see my entire portfolio red, I can't function, right? I just can't. Especially if I'm up 40%.
We've been in this game for how long now?
I know.
2018.
I know. So I got to walk away, But the one thing I found that works for me is if I look at a chart, and I use supply and demand zones as my main method, right? Pivots. And I use an indicator called the market webs, and I get no money off of it, but I find that I've made a lot of money from it. So if you're ever lost or confused, DM C from Hertz or Market Webs on Twitter, and they're great people. They developed the software that I use. But it gives me opportunities to see where price action is going into price discovery, higher or lower, right?
Mm.
Yeah, so I've been talking to people, and like I have people telling me like, oh, should I be buying this or that? And I'm like, listen, I don't know.
For years we've been telling everybody we know, like since 2019, we were doing shots to Satoshi.
Right, at weddings.
Birthday party, you remember that?
We were going to birthday parties and weddings. We were taking shots to Satoshi, right? And like,
we're obsessed.
I tell people what I'm doing. I can't tell you what to do, but I've been telling people that I'm buying Roku since April. I told them I was buying Livongo, and you actually looked into Livongo and you started a position because I brought it to your attention, right? And I tell people about Bitcoin, and no one took it seriously. And then Bitcoin hit 30,000, 35,000, and then people are like, "Should I buy it now?" And I'm like, "Yeah, whatever you want to do." I don't even care. I was like, "Whatever you want to do."
Nah, see, what I say is, listen, just get a starter, get a lid, and just watch it.
Right.
Not going to go anywhere. And then you get the text. Then it starts going up, and they're like, "Oh my gosh, I double my money. Blah blah blah. Should I add more?"
Right. And then today, like people are hitting me up like, listen, should I be buying Doge? And I'm like, one Doge will always be one Doge. And they don't understand what that means. And I'm like, listen, you do what you want to do. But my logic is there's 168 billion tokens in circulation. There's basically no use case. There's no adoption.
Well, all right. So this is the thing with Doge, and this is what I heard a long time ago. I don't know how true it is. But basically, I heard the reason why you see Doge pump and then you see everything else pump is that whales are shuffling money amongst exchanges, and in order to get the money there quicker and with less eyes on it, they're using Doge.
That's smart.
Doge is super quick, right? Doge basically they forked the Bitcoin code, they sped it up, they added way more coins, way more blocks, and so it works way faster but way less secure. Regardless, supposedly people are sending Doge to and from exchanges right before they do their buys because everything else is so closely monitored, and apparently Doge is not. I don't know how true it is.
You know what?
That's the rumor.
You know what, though? I think when you put them side by side, there might be some truth to that.
But we do see the beginning of the cycles. Yeah, they always start with Doge. We saw that this summer. And this summer, right before all the DeFi explosion, right before we got the Unity airdrop and all that stuff, Doge ran. And it was cool. It was like, oh, nice. Doge ran.
Yeah.
I mean, saying it was because of TikTok.
Right.
And then suddenly just DeFi ran super hard.
And now if we look at Doge the past couple of days, right? Bitcoin was chilling at like 30, 31. Now it's at like 37. I haven't looked at it in the past couple of hours, but maybe there's a point there. Maybe the whales are using it. And I would use that if I was a whale because you want to create a position without bringing attention to it. And that's a great way to do it.
Yeah, I mean, like, if you're using something really fast, what are the alternatives? Like, Doge is accepted by most major exchanges.
Just not Gemini or Coinbase.
Not Gemini. Is it on Coinbase Pro?
Maybe Pro. I never use Pro because I'm too lazy.
I think it's on, it's definitely on Binance.
Yes.
Yeah, so, I mean, maybe there's some truth to it. But also, it's a proof of work coin, right? So, Ripple super fast, Stellar super fast, but, like, you know, they're DLTs. They're distributed ledger technologies. They're not blockchains, right? They're not secure. They're essentially run by, like, small, you know, I think Stellar is probably way better than Ripple in that respect, but still, they're run by a certain number of power players that could really, if they got subpoenaed or if somebody really came down and put some pressure on them, they could really get rid of it if they wanted to.
Right.
Doge, I don't think you can because you can't track down all the Doge miners and make them stop mining Doge. I mean, that's really the way to go.
Yeah.
Also, if you're looking to make money,
I
mean, that's also a different game, right? Then you can look at memeified stocks, right? Yeah. Memeified coins, like Dogecoin, right? Should you put everything you own into Dogecoin? Absolutely not. Do not do that, ever. But have we seen Dogecoin pump a bunch of times? If you had a small allocation of Dogecoin that you'd put in every time it took a 20% haircut, 30% haircut, put in a little bit, at some point the jig is going to be up and it's not going to work anymore. But until that happens, pretty much rinse and repeat. You know, if you've done it once and you see it happen again, might as well just kind of keep riding it out. Just manage your risk. That's the most important part.
And I think that's what we're going to talk about today, right, is the planning process, the risk management process. And I am predominantly an investor, but I actively manage my portfolio. And my philosophy is I try to go 90% long in terms of long-term outlook, and then I give myself 10% of swinging opportunity, right? If I'm going to meme trade something or trade a meme, I'm not putting more than 1 to 5% max in that entire position. And if you're trying to YOLO it and make it big, that's cool. If you're going to hold the line, that's cool. But I'm trying to make money, and I'm not interested in doing that. I'm interested in executing the best process, right? And I think that's the one thing that we're seeing lost right now from the GameStop, the AMC, the BlackBerry.
I'm guilty, though. I'm guilty because this is basically what I did. I saw this whole thing playing out, and I was late. I was not paying attention to what GameStop was doing. People had told me about it, but I wasn't paying attention because I got my own thing going on. Like, I can't just research every single idea that's put in front of me when I'm distracted by my own ideas. So, being late to the game and then seeing how this whole thing played out, I was just like, you know what? I gotta put something in the pot, but I'm not doing this to make any money. I'm doing this just to make the point. And I think that we might be seeing like this weird sort of turning point in a way. Like Tesla was really the first shot. You know, every institutional investor, or almost every institutional investor, like the mainstream establishment was saying Tesla is shot. There's no way. It's way too overvalued. And what did we see play out?
Yeah.
You know,
dude.
Now Nancy Pelosi bought $1 million worth, right?
You bought call options, yeah. And Nancy's a killer, dude. She bought 5,000 shares of CrowdStrike at like 140 a month before the earnings report, and then that basically turned into a ton of money. She's a killer, man. She's a killer.
Yeah, she's a killer. I'm sure. It's just her investing prowess alone. She's gonna be, especially like California.
I'm
the
sure,
Oracle of California.
I'm sure she wasn't sitting at a congressional hearing about national security and cybersecurity and Russia's threats, but whatever. I'm not going to get into that. But Tesla, I think you brought up a great point, right? Tesla was one of the early stocks that I traded. But back then, I didn't understand what I was doing. We talked about this last week. And I would listen to people. And I remember watching Jim Cramer. And you know what? When you watch Jim Cramer as a beginner, you watch him because you're a believer. When you watch him as a veteran, you watch him because he's crazy and it's funny, right? So he goes on to Mad Money and he's doing the lightning round and a caller calls in and he goes, Tesla. And Cramer went off nonstop for like 30 seconds straight saying Tesla's the worst company in the world. You got to sell it, sell it, sell it. So at that moment, I went on my phone or my computer after hours because it was like 6 o'clock or 6:30. 6:45, wherever it was, and I sold Tesla because it's the worst company ever. It was at $50 a share, right?
Oh my gosh!
And you know what? Who knows what would have happened? But it shows you how ignorant and lost you are when you start off because you have no plan and you have no process.
Exactly. Yeah, that's such a great point.
Oh, it's the best. So I think that's something we want to kind of touch on today to help people understand how to create a plan or how to create a process.
No, realize people think that I'm going to put money into this thing and then it's just going to keep going up. They want to get in after it pumps. It's the craziest thing to me.
I'm
like we were also in that mindset at one point.
Yes.
So, I mean, you got to keep that with you too.
Yes. And I talk about this all the time. I would have blown up my account completely. I would have lost all my money trying to trade this because of the swings. Number one, these are violent swings. But number two, I personally, when it went from 50 to 80, I thought that's pretty crazy. But this is probably done. Then it gapped up, opened over 100. I said, wow, how much further can this go? And then it kept going. So that got out of my control completely. And that's why I never took the trade because I couldn't trade it. I didn't feel comfortable. I'll be honest with you. Right.
Yeah.
But
listen, I basically didn't do it either. I put enough money in that, when I see the candle years from now, I could be like, hey, I was part of that candle.
Right. But that's the thing, right? You don't have to make a lot of money trading major size. There's one thing I've always heard great traders say on a stock or a situation like this, less size, more range, right?
Yeah.
If you taking 5 or 10 shares helps you stay in the stock on a $20 swing down, and then it helps you capture a $200-$300 move up, who cares if it's 10 or 20 shares? You just made a great return. Right?
Exactly.
When you're buying 1,000 or 2,000 or 5,000 shares, that $20 swing down is going to kill you and you're going to panic.
And you know it's going to happen, right?
Yes.
Like now, every single trade I go into, I'm like, all right, I'm going to, this is the amount I'm putting in, but also this is my reserve amount after it goes down.
Right.
That's immediately part of the plan now.
Right. Like I bought Square yesterday, pre-market, right? I got in, I had 200 as my level, 201 as my level of interest. And pre-market, it was at that point. And I was feeling kind of bullish when I woke up yesterday. So I said, screw it, I'll buy a starter. And then I saw it kind of grinding up a little bit pre-market. So I added to my position. But I didn't go full size. I went half size because I wanted to be ready. I had 190 and 185 as levels of interest lower. And if we went down there, I didn't want to stop out because I like to trade long term. and I wanted to build a position lower if it goes lower, right? It didn't happen. But you know what? I was in the trade number one, and I actually added a little bit today on the dip to 216. And I still left room now. If we gap down one day, we're down 100, points in the NASDAQ, 200 points in the NASDAQ, and Square opens up at 190 or 195, I have room to still buy. And I'm going to still buy, right? Exactly. People need to know that process. Because if you go all in, all or nothing, it gets a lot harder to manage those big drawdowns.
100%. And that's when the emotions kick in. And that's when you're scared. It's bipolar. You have the greed and fear that both play out really quickly. This roller coaster. And if you're not used to it, it can take over and it can really cloud your judgment.
Yeah. I mean, look, I watched Teladoc go from 225, which is where I got the bulk of my buys in, all the way up to the 290 area. And now we're back to 255 today. Does that bother me or scare me? Not really. I don't care because I got a 10-year plan and I've been adding on the way down because I left room to add to buy more, right? I didn't buy the breakout because I like to buy the retest of the breakout point if it happens. I'll be honest with you. 2020 was crazy. All you had to do was open up any scanner, any screener, and type in revenue growth over 50% and just buy down the list. And you double your money at the worst, right? You can try to do that now, but I like to be a little bit more vigilant. And I've heard about this idea from people that are smarter than me, right? Like Ophir Gottlieb has been preaching that scanners have worked in the past, but thematics will work better in the future. So I've been adjusting my process, right? And now I look thematic first, and then I try to confirm the stock choice within that thematic by looking at their fundamentals, right? Mm. And for me, right, if I look at a thematic like digital health, I look at Teladoc, right? Or whatever the stock is. I want to always confirm it by looking at their fundamentals. So I know a lot of people focus on PE ratios and things like that. They're only useful when you're looking at Apple, Facebook, the FANG stocks, the established large caps, right? Mm. They're not useful for a high growth company. So I kind of focus on price to sales ratios or enterprise value to sales. And ideally, I want to be starting a new position in something that's trading 30 times or less. And then I look at revenue growth, right? The higher, the better. If I can find a CAGR over 30% for 3 years, I'm happy. If I'm looking at CrowdStrike, which is a monster, trading over 50% each quarter, year over year, that's amazing. But you want to look at growth in general. And then I take it a step further by kind of trying to see if we have free cash flow growth. And this is something that actually someone on Twitter brought to my attention when they talked about how Amazon had a terrible...
you know who that was? You can shout him out.
I actually don't remember who it was. I apologize. But he was talking about how Amazon had a terrible valuation for its entire existence. But the one thing people kept missing was their free cash flow growth, right? Which was gearing towards positive and then became explosive.
You can look up articles during the internet bubble where these journalists just do obituaries on Amazon.
I know.
It's hysterical. There was this one article I read where they were covering a holiday party. He's like, well, this will be the last holiday party for Amazon. You moron.
And you know what? If Jeff Bezos left it as strictly a bookstore or even just strictly as an e-commerce website, it might have been the end of Amazon, or they may have underperformed their valuation for the rest of their life. We can't discount the effect of AWS, which none of us saw coming when we looked at Amazon in the year 2000, right? But that's why you buy a good CEO. You're not buying the company, you're buying him. And Bezos might be, in your eyes, a bad human being. He might be a psycho, whatever that case is.
It's just so interesting how we just label billionaires. of these companies, right? Like we choose who we like, who we hate. Like everybody hates Zuckerberg, everybody hates Bezos.
Right.
The Winklevoss though, they're awesome.
Right. We love Jack Dorsey, right? Just
yeah.
not on Twitter. We don't like Jack Dorsey for Twitter. We like him for Square, right?
Shemad.
It's weird.
Hey.
But you're right. I think we pick and choose, right? Like Steve Jobs was an awful human being in terms of how he treated people, but we revere him as an icon for what he accomplished, right? That's a really interesting point. And I wonder why that's the case.
You know Alex called Steve Jobs?
What?
Did you hear the story?
No, I don't think I ever heard the story.
So we were working at a brokerage firm, right? And we were cold callers. And he got Steve Jobs Dun & Bradshaw, which is these cards you get with the names of like CEOs.
Right.
And your job basically is to call up and get the CEO or the executive on the phone, right? The guy on the card. But they always have a secretary, and you got to try to pass the secretary. This dude calls up Steve Jobs' number, calls the secretary, says, "I'm Dr. Goldberg. Please, I need to talk to Steve urgently." Steve picks up the phone and he's like, "Hey, Steve, how you doing? This is Alex from Blank Security."
Oh, man, I never knew that story. Jesus.
Yeah.
That man is now my insurance broker. Let that marinate. Oh, man. But getting back to my plan in terms of fundamentals, right? Sales growth, free cash flow growth, high gross margins, preferably over 40%, right? A good cash to debt ratio. I'm not buying Ford because Ford has so much debt from their credit department, right? I'd rather buy a company with minimal debt and strong cash flow if I could. And I want good earnings growth too down the line, right? You want to look at a company and say, when do you plan on being cash flow positive? When do you plan on having your EBITDA become positive, right? And if the answer is 7 years from now, that could be a really hard buy and hold. Yeah. It needs to be something very special for you to stick with it, right?
Has to be super memeable.
Right. No, but it has to be. It has to be Tesla. It has to be Amazon. And I think it's part of the process is understanding what you own and looking forward. That's why it's really important to have the thematic, right? If I buy ZYXI, I believe they're a medical devices company related to treating pain, right? If you look at their sales growth, it's fire. It's like 800% or something ridiculous like that.
Oh, wow.
But the stock never moves, right? If you look at the chart, compared to a high growth tech stock, right? You'll see a major disparity. So it doesn't always work looking at just sales growth. You got to look at the whole picture. And that's what the one thing I want people to realize is if you're investing, think big and look big, right? If you're trading, then you're just going to look at the chart at the end of the day, right? Does it have a strong chart? Is it breaking out of a base? Is it breaking out of a pattern like a downtrend line reversal? Is it making higher lows and higher highs? You got to look at that factor, cup and handle, et cetera, right?
Exactly. And these things are great to look at and to understand and pick up these chart patterns. But, you know, when you actually look at the probabilities behind them, like it's never 100% that all of a certain way. It's always like, you know, 70% of the time it'll resolve, you know, up or it'll resolve down. And you kind of got to play with that with your overall risk and decide how much you're going to allocate based on, all right, that's one more piece of information.
Yeah, if you actually pull up the GameStop chart from today, right? Friday, January 29th, you pull up the 1 minute chart and you throw VWAP on there. I was talking to a buddy of mine and I said, listen, I wouldn't be buying GameStop today until it crosses VWAP and holds. And it constantly was like testing VWAP and then failing or breaking up slightly for a couple of minutes and then failing underneath. And then when it finally cemented above VWAP, it ran $40, right? Oh. You know, you got to understand that you might have the right idea on a trade, but if it's 10 a.m., it may not work for you until 2 or 3 p.m. So you have to wait for the best opportunity. And sometimes you get chopped out of a trade. But if you have a tight stop and you burn, you know, whatever the equivalent that you can afford to burn is, whether it's $20 or $100 or $1,000 on a 6-figure account, you have to know what you're doing and always have a stop when you're day trading. if you're day trading or swing trading without a stop, you're not trading, you're gambling, right? I don't care if you say
I have to say for crypto,
yeah.
Unless you're trading margin, which I don't suggest anybody trade margin because you don't need to. You can make enough money just buying spot and holding it.
Right.
You need to go complicate your life where you could just lose everything in a couple seconds. I mean, look what BitMEX was doing.
Right.
BitMEX was literally had accounts on Coinbase, literally had accounts on, I think, Bitstamp too or something like that. And they would see, oh, we have too many longs. And they would sell those spot positions on those exchanges, dumping the price of Bitcoin and making money liquidating all their customers. Absolutely ridiculous. And you notice how we went up as soon as BitMEX got caught, right?
Right.
As soon as they got indicted, now nothing but smooth sailings. We don't have BARTs anymore. I wonder what happened.
Oh, but it's Tether, isn't it? Tether and Bitcoin.
Oh yeah, it's Tether.
It's all Tether. It's not real money. They're making it up in some guy's basement, right?
Yeah, they just hit print and they buy all the Bitcoin and we all get rich. It's amazing.
When those Bitcoin memes were coming out
actually,
during
they type Rosebud.
Like early April and March, when it was like, Dad, what'd you do in 2020 during COVID? And the dad says, bought more Bitcoin. And the kid's like, legend. I was like, yeah, I want to do this meme. I'm buying more freaking Bitcoin. I don't give a crap, you know? But, you know, you gotta do it with an asset that has a fundamental reason to go higher. You don't do it with an asset that's artificially being inflated by a short squeeze or a pump and dump scheme.
Exactly. And if you weren't thinking about AMC until you saw it on social media or until somebody told you about it, and now you're putting a significant amount of money, please don't do that.
Dude.
If it wasn't a part of your thought process at all, and now it is, throw a bone in there. Why not?
Dude,
not lose it all.
When GameStop last Friday went from, $50 to $100 or whatever it was, I tweeted, it's a $4 call out in March for AMC is like $1.50. It's probably a good lotto gamble. But I was too cheap to burn $150. And that
you burn it on hedges.
Right. I do it all the time on hedges, right? I got like $500 in hedges that I'm burning left and right.
All right. So just to go back to hedges really quick, because we do this all the time where you're like, hey, I'm going to put on a hedge and you tell me what you're going to do. And I do it sometimes. And I've done it like 3-4 times. I've just lost like a few $100 every single time, and it's fine. But like, I'm like, why are we doing this? So the last time you did it, I was like, you know what, I ain't doing it. Yeah. Well, here's the thing. When I see that price action is looking heavy, where it might go lower, like today, actually, I put on a hedge when SPY was at 372, and I tweeted, if SPY holds 372, I like what SPY is going to do. I would be a buyer in 372. You gotta tell everybody. Not everybody might know. Right. What SPY is? What is SPY? Oh, so SPY is the S&P ETF, right? So basically you're tracking the index. It's I think it's like 10% of the actual index price, whatever it is, right? Okay. And my levels are showing me that 372 was a downside pivot. When it broke 372, I said, all right, I'll buy protection. I'm net long. I have targets to the downside of 355 and 350. Which I think are very reasonable to hit next week. I can sit it out and wait for things to go, or I could be a degenerate trader and try to make money on the downside, which I am, I'll be honest. And I wanted to take a cheap hedge, right? So I did 2 positions. I bought a put spread. I don't hedge by shorting stock. I don't hedge by buying naked puts unless they're really cheap. I hedge by buying a cheap put spread. And by cheap, I mean, if it's a $5 put spread, it better be worth, or I better be paying less than 60 cents for it. Okay. Per spread. If I'm paying $1 for a $5 wide put spread, I'm not interested because why is that? Well, the max you can make in a $5 wide put spread is $5 minus the cost that you paid. So if I'm putting 55 cents on the line, my max profit is $445. That's a good risk, right? I'll bet $55 to make $445. I'll take that. So with 355 and 350 as my downside targets, I put on a 355, 350 put spread expiring next week for, I believe I paid 55 cents, right? To me, that helps me stay level-headed, and it helps me keep perspective.
I've also been a little bearish on the overall market because we can't keep a steady bid either, right? Yesterday and today were better. Today was not an official distribution day because the volume wasn't higher than yesterday's. But today was a pretty ugly day in the index, right? So I also bought some NASDAQ QQQ put spreads because my levels were, again, in the 290 area. So I bought 295, 290 put spreads expiring next week and February 19th. Figuring I think we're going to have a correction. I want to capitalize off the correction. I'll burn $55 or $150, whatever it is, to make $4, $5, or $1,000, right? I can live with that because here's the thing. I'm burning $100, $200. That might suck. But if the market rallies, Teladoc on its own is going to be making me a ton of money, right? Roku on its own is probably going to make up a huge difference in what I spent, right? Roku, if it goes back to its all-time highs, I add like $5,000 to my account in theory, right? I can live with being wrong and burning a small hedge if it means that I have the opportunity to make more money on the long side if we run higher. So it's all about for me is to keep perspective and to stay level-headed so I don't sell Roku at a profit of 100%. I hold Roku for a profit of 1,000% like I think it can do, right? And that's all hedging is keeping my psyche comfortable so I don't sell my biggest winners early out of fear of them going lower.
Makes sense.
Yeah. So, and I actually put a hedge on Teladoc today as well because I felt like it was looking a little heavy. And I had 225 as a potential area of interest. So I said, $40, I'll burn it. If it works out, I make 500. If it doesn't, Teladoc doubles in terms of what it's worth right now in my book. My profit will double. So I'm not worried.
Exactly. That's such a great way to hedge too, because you're really long. And so you're kind of like winning out either scenario happens.
Right. If I buy a naked put, it'll cost me like $5 per contract or $10 per contract in like Roku or Teladoc. I'm not doing that because now that messes up my actual rate of return.
Yes.
I want to have my total profit be close to 10 times the risk I'm putting on that hedge. If I'm risking $100, I want to make sure I have $1,000 that I can make off that hedge, essentially being wrong. You know what I mean?
Yes. So I got a question for you. So the way I use gold, right? How it's like a big part of my portfolio.
Yeah.
Also kind of like a hedge in a way.
It's a dollar hedge.
Yes. So I guess Bitcoin is too, right?
It should be.
I feel like, gold just being the more conservative one out of the two. And I just feel like it's not going to drop that much. Like the whole market could take a hit. And like if gold drops, which it did in March, if you buy that dip, I mean, it's easy. It's free money, basically, in my opinion.
Yeah. I think gold's a good hedge. I personally don't own any gold, but that's because I run a very aggressive growth portfolio, right? And my worst stock from a growth perspective is Apple and Disney. Like those are the only two stocks I own that aren't a high growth stock anyway. And I think that's good company to be in with those two, you know?
Oh, 100%.
Right.
And I have some Apple as well. I had Disney, but I ended up just kind of trading it after because I don't know, I wanted to change it to something else.
You know, I was trading around a position with Disney throughout 2020, and then I just stopped. And I kept a small allocation, actually. And then they started coming in with those streaming numbers and the guidance on the streaming numbers. And I said, if they're guiding for, I think, 254 million subscribers by 2024, that's a $300 stock. And I added as much as I could afford to add while maintaining my risk tolerance for Disney.
Yeah, I feel like betting on Disney is like betting on America in a way, you know?
Yeah.
Just one of those ideal companies, and everyone in the world knows it. It's such it's a really good company to have overall.
Yeah.
It's kind of low risk. Like I don't think Disney's going anywhere.
And here's the thing about Disney, right? For 20 years, it was 40% of their revenue coming from the parks, and then some money coming from their animation studios, and then they bought Marvel, and that was basically it, like a little merchandise. Now with Hulu and Disney Plus and ESPN too, we forget about ESPN. It's a great business to add on. That 40% of their revenue being in parks is going to decrease. Eventually, it's going to be worth 20%. and maybe even 10% of their revenue. And if that's the case, you're basically getting streaming services at a premium and then this great parks business at a discount. So it becomes a high growth opportunity in a value company's body. So I think it appeals to two types of investors, right? My dad could buy Disney, but you can buy it as well, and you'll both be satisfied.
Yeah, no, that makes sense. It's really people have also a really positive image of Disney too.
I don't know why. I think it's a terrible company.
Why do you think it's a terrible company?
I don't know, man. You see, like, you ever like Miley Cyrus, like you see all the Disney stars that come out of there. They're all like just crazy. I don't know what happens to them.
Yeah, it's probably just like being a child star in general. I don't think it's like Disney.
You're probably right, but it's a great stock to own. I don't care. Keep churning out Miley Cyrus's. It's working. It's all I care about. Make money for me.
Exactly.
You want to talk about SPACs, right?
Oh yeah, let's talk about some SPACs. So, what is a SPAC? Because honestly, I've bought some SPACs. I want to buy more SPACs, but I literally don't really. I know they're a special acquisition company. They're bringing things public, but dude, what are the details of that?
Yeah, so I know you and I have been trading SPACs for most of their existence in the past year, right? Like I put you on to what became Laser, and that was a huge winner for us, right? Like we made like 500% on it. Big winner. And unfortunately, we took a small position size, but that's okay, right?
Yeah, it's risk reward, man.
Exactly. We made a couple of bucks, made a couple of stacks, and we risked nothing. So I can live with that, right? But a SPAC is, like you said, a special acquisition company. And I think it's really hard to determine if a SPAC is worth the investment in the pre-merger stage, right? So there's two ways to go about measuring if you should buy a SPAC.
So what's the difference between going through like a SPAC and listing yourself exactly? And what are there different requirements? Is it just compliance?
I think it's a lot easier to go public through a SPAC.
Yes.
Because of compliance issues and regulations. You do miss out on opportunities, right? Like when you IPO, you give the banks a lot of your money essentially to do it. But going through that roadshow benefits your business as well because now you have more analyst attraction, right? And when analysts are aware of your company, it gives you better price targets, better estimates, and I think that helps you a lot building it
right.
A better reputation.
Like going back to what we were talking about before, are we going to be entering like a different kind of paradigm? Now, we already seen Citron now; they're not going to release new short reports.
You ever see the joke on Twitter? His name is Andrew Left because he's never right. The terrible dad joke. I love Citron. People, give him hell all the time. Citron burned my dad for $50,000 10 years ago on VoxelJet. Okay, my dad bought VoxelJet at $55, and he went in heavy because 3D printers were on fire, and then it went to like zero essentially. And ever since then, I paid attention to Citron. I don't care what people say. If he goes short, I exit because I don't need to deal with that headache, right?
Yeah.
I witnessed it firsthand.
Yeah. Now so how do you feel seeing this play out now? Seeing him take a huge loss and seeing him get a taste of his own medicine. How does that make you feel?
It's Wall Street, right? You make money, you're going to lose money. You deal with it. You don't cry about it. I think what Andrew and all the other...
I have to cry about it, but like, fuck that dude.
You know what? He made me money on Jumia, so I'm not going to complain, right? But no, what Andrew, his decision now is very interesting. His long picks have been very good, actually, in the past like couple of months. He recommended Jumia at basically like, I think it was like $8 or $13, and I bought it at like 17. I got in a little late, but in reality, 17 versus 60, I got in very early, and I told you about it, and you bought some for your sister, and she did very well.
Yes.
He mentioned Star Peak, which hasn't run yet. He mentioned another one, XL, Fleet, which hasn't run yet. But I think those are all solid companies. I think what these short hitmen do is they put out a short release hoping to drive down the price a little bit more so they can cover. And I think that's wrong inherently.
Yeah, of course.
And I'm glad he's no longer releasing those short pieces. But the one thing is, are you releasing a short because the stock is too expensive in your eyes, like he did with Palantir? Or are you releasing a short piece because the stock is a scam and you want to save people money, which he's done also.
Mm-hmm.
And I don't think we should ban him from releasing his positions on the short side if they're scams. I want him to still tell me if a company's a scam in his eyes, because that will help me out as an investor. I want to be unbiased. I want to see
but then look what he was doing with GameStop, where literally you're in the midst of a pandemic. You have how many workers that were home, not collecting a paycheck for so long. He's trying to drive this thing to the ground. Like, I don't know about you, man. I have a lot of positive connotations to GameStop. I went in there not too long ago, actually. Before the pandemic happened, I went in there. I had something to do in the area where I had something to do where I was at. And I had some time in between things, basically. So I went in. I had money on my speeding wallet, which was another reason I went in there, because I was like, hey, man, I got some extra free Bitcoin here. So I tell the guy, I'm like, listen, I want to shoot zombies, but I also want to get married and have a family. And he was like, yeah, I got you. And he just pulled out this game, gave it to me, I had a great time. I have nothing but positive connotation towards GameStop.
I got the opposite, right? I pre-ordered the Nintendo Switch for my wife. Like day one, pre-ordered it. They told me, like, they charged me. They told me it was on its way. And then, like, the day it was supposed to be delivered, I get a notification saying my order was canceled.
What?
Right. And the order was, like, it was back ordered forever. Like, I couldn't get one for, like, months after that anywhere else. And I was really livid. So I had the opposite. And I have no problems watching GameStop go back to $10.
All right. So now it makes sense.
I do respect what GameStop's trying to do, though, by reinventing themselves and becoming an online store. I respect that.
Yeah, of course. I mean, but also, like I said, they don't really have any choice. I mean, I wish there was some way they could take this money and give it to the people who worked in the stores. The people who made the least amount. I wish they could do some sort of offering for that, but it's definitely, they can't even get a bank to give them an offering.
It drives me crazy. I love offerings, right? In a company that's trying to clear their debt and continue growing. I've been wanting Jumia to do that, and they haven't done that yet. I was happy when Invite did it. When Livongo and Fastly did it months ago, I was happy. GameStop, it might be it. They might not be able to get the demand.
No. I mean, I read. I don't know how true it is.
I believe it. Because why would you because when you do an offering, you put in theory, a floor on the stock price. It doesn't always work. Like Invite had a $51.50 offering price, and it was down to $45 this week.
Yeah, and that's usually how it goes.
Right. But you can't put a floor at $338 for GameStop, because inherently it's worth $30, $10,
Yeah.
But I hope they do something for their employees. I hope everything works out. I know insiders are selling a ton of stock, and you know what? Good for them. They should sell stock. I mean, it's your right as a shareholder. But we'll see what happens. I do think we're in a crazy market, and I think SPACs are a big part of that market right now. And
so what was really the first SPAC that the first one I was aware of was Space, right?
Yeah.
But what are like the other ones?
So DraftKings and Space, I think, were like the big two that came to market and were home runs. I missed both of them because I didn't understand a SPAC at the time. I'm like, what's that? I've never heard of it. And then Nikola happened, and I'm like, oh, Nikola. You're telling me you're an electric car company, or essentially, but you named yourself with Tesla's first name? And I knew right off the bat this was complete BS, because
of course,
if I'm building a brand, I don't pick another brand. If I'm, Pepsi, I don't change my name to Coke Bola, You have to create a different name for yourself. And I knew right away that was shady. And then everything obviously fell apart. But those were the early ones. And then a couple of good ones.
Nicola's still around, though. People are still in Nikola.
Yeah. I don't know why. Nikola is not worth it, but hey, $9 billion market cap for a company.
After the whole thing with the truck, if you guys aren't aware, Nikola is this electric car company that you could probably explain it better than me, but they basically had this expo where they showed off one of their new vehicles, and they just basically took another vehicle and spray painted a Nikola logo on it.
Yeah, they basically put it at the top of a hill and pushed it down in neutral because it had no engine.
It's amazing.
But I think the first SPAC that I bought and it made sense to me to buy was IPOB, because Chamath is a killer. I mean, he is beyond
he's on fire. This is his year. He might be in California.
Dude, I mean, he's he's a pretty chill dude, and I really respect what he's doing. And he's good at picking companies. I'll admit it, right? I bought IPOE when he announced SoFi because I'm like, yeah, SoFi, sign me up. That's like the good Robinhood, essentially. But he was like, his SPACs were the ones I first got into. And then all the EV craze, but I didn't want to buy into the craze. So I kind of waited, and I bought a little of some other SPACs here and there. The Skills was a SPAC that I owned when it was FEAC. I missed KCAC, which became QS, QuantumScape. You know, you miss some. But SPACs are fun. They're fun. The key to buying a SPAC, though, is trying to be there early. And you want to be as close to net asset value as possible. And if you don't know what that means, is for most of these SPACs, net asset value is $10. That's when the IPO at. And what happens is if the stock's at $11 and you buy it, and they never announce a merger, you get your money back for $10 a share plus interest. So you would have lost maybe $1 or maybe 50 cents on that trade. So it's like a stop on your account, essentially.
Interesting.
So
I never knew that.
Yeah, a lot of traders actually use SPACs as better than cash positions for that reason, right? Because cash, you accrue 0 interest when it's sitting in your account. You put it in a SPAC, you might make some money. So that's become a thing. But they're hard because you need to buy a SPAC with a really good team behind it. And not everyone is aware of the team behind it because maybe they're not familiar with venture capital, things like that, you know?
That makes sense.
Yeah. So
have you seen any like flop SPACs so far?
I think we've seen a few. Yeah. I bought some Talkspace, and I think Talkspace could still work, but I sold it because I was cleaning my book out. But that hasn't traded well at all. With HIMS at $18, Amwell that hit like $45 earlier in the week, Teladoc that almost hit 300. I expected Talkspace to be at $15. It didn't happen. That's a red flag, but whatever. But there's definitely been some SPACs that didn't work out. VLDR, which is another LiDAR company, that was a SPAC.
I think I played that too with you. Yeah,
that one kind of got overshadowed by Laser. It didn't really work out until Citron said get long VLDR. There's more. I can't think of any off the top of my head at the moment, but there's definitely been SPACs that were duds. Clove has been quasi a dud. It was dead for a while. Then it got hot. It went to like $16, and now it's around 13. Formerly IPOC. It's a Chamath play, Clover Health.
Oh, Clover Health. Okay.
It's got a big cult following, but I haven't seen any real push behind it yet. So we'll see. But you got to buy a SPAC because you're buying the team and you trust the team if you're buying pre-merger. And that's where you get the most money, right? Like if I bought IPOE at $12 before I knew what it was, it could have turned into SoFi and gone to 20 and I made $8 a share. Or it could have turned into, Dish Network and it would have gone nowhere, let's say, right? I don't know if Dish Network, I'm just using it as an example, So you're gambling.
Dish Network accepts Bitcoin, just by the way.
Really? I didn't know that.
I read it somewhere.
That's awesome. So if you're buying pre-merger, be aware of that. I like to buy pre-merger on teams I know, but mostly I'll wait till post-merger, pay up for it if there's a good presentation. And I've made good money on SPACs post-merger as well,
Nice.
Yeah. But I'm really big on HAAC. You can put the U after it if you want units plus warrants, or you can buy just a warrant, right? But that's the team that brought Livongo Health, to market. Glenn Tolman, Hemant Taneja, I think is his name, if I'm pronouncing it correctly. There's some really good, smart people there. And they're basically all about health assurance. And that's a big thematic, I think, that I've been involved with in my portfolio. And that's one of my driving reasons for owning Teladoc. And this one is because I think that thematic is going to redefine healthcare. Right. But
and we got into it in the last episode too.
Yeah.
Where we were talking about the, I think Livongo, the CEO or something like that.
Yeah, we talked about Livongo's founder, or I believe it was Glenn Tolman's son, who had the diabetes issue. And Livongo's software helped him out a lot.
Yeah, basically saved his life.
Yeah. But there's a couple of good SPACs. Kathy Wood has bought a couple SPACs. She bought Longview Acquisition Company, LGVW, which is Butterfly. I think it's a really cool company. They do basically like sonograms, but like their machine, you can hook it up to your iPhone.
Whoa.
It's super innovative, super cool. And I bought that one at like $15 a share, and I traded up to like 2021. And I sold it because I was trading it. But Kathy has bought that in ARC G, I believe, and maybe ARC K, I'm not sure. But it's a cool company. I really like what they're doing. And the Gates Family Trust is involved with them.
Interesting.
She's also bought EXPC, which is bringing Blade helicopters to market. And
Blade helicopters.
So if you're unfamiliar with Blade, think about it this way. They're essentially Uber in the sky.
Whoa.
You can book like a helicopter flight or a private jet flight from your phone anywhere you want, but they're expensive. The main thing that they're doing.
What kind of vehicle is this? Is this like just a helicopter, or like is it like some sort of sky car, or sky car? Right?
So what's really cool is right now they're mostly just helicopters and private jets, but they are working with all the eVTOL, electric vertical takeoff and landing companies, to integrate their hardware, their OEMs, into their service. So like they have partnerships with Airbus, Boeing, a couple other players, and they believe that eVTOLs are actually going to be a major revenue stream for them because it should make it cheaper to fly, right? If I want to go to the Hamptons right now from New York City, it costs me $800.
Nah, 300, I think.
It could be 300. I thought I saw 800, but I could be wrong. I know you can go to JFK for like $200, which is cheap.
Oh, so maybe that's what I saw then. I don't know.
Yeah, JFK is cheap, but
maybe they were running a special in the summer. To go to
right,
$300.
But it's expensive for the average person, right?
Yeah.
And the idea is an eVTOL will help them become more affordable. The one thing that they also do is medical transplants. So if like you do like an organ transplant, they will like pick up your kidney and fly it to the next city, which is awesome.
Oh wow, that is great.
Yeah, and I mentioned this briefly last night, I believe, in Twitter. Kathy Wood has been talking about drone delivery services and how the platforms could be major revenue winners, right? She's expecting like $250 billion in revenue in 2030 for drone delivery services.
I worry about drone deliveries, man. I really do. Because, I mean, I don't know why my mind automatically goes to stickball and like knocking a drone out of the sky, a lot of money. But also I was thinking about it like this too. So people steal Amazon packages from people's stoops all the time, right? And like it's really grimy and gross that people do that. Like that's going to somebody's house, you don't know what it is, and you take it, like whatever. You're literally stealing from someone's home. It's kind of, it feels gross. But stealing it from a drone, I don't know if it's that gross, right? Because like the worst case scenario, Amazon's just going to send another drone.
Right. They don't care. Tax write-off.
So I wonder if people are going to be robbing drones in the future.
And that actually brings up a really good point. The other day I told you about a patent I saw for Ford, where they are actually created a patent for drones to come and jump your car if your battery's dead.
Whoa.
Which is really cool. Right.
Until there's drone accidents in the sky and you're just walking and suddenly you get a concussion because two drones crash directly over you.
So we have a lot of issues to unpack first, but it seems like the future is heading this way.
Yeah.
And EXPC could be a player in the drone delivery services potentially, as well as Uber and DoorDash and Amazon. And I imagine UPS and FedEx as well will get a hand in it. So it's new markets. It's pretty cool,
It's true. Yeah, that is really cool. And that's a great trend to see moving forward, too.
Yeah.
They have drone piloting courses and licenses and drone races.
That's pretty awesome.
Yeah, right? Where, like, people do, like, high-speed maneuvers through obstacles and stuff. It's pretty dope.
I would love to, like, get behind a real drone, not the $20 one you buy. And see what it's like,
Yeah. Well, did I tell you I launched a rocket recently?
No.
Rockets?
I didn't know that.
Yes, I did. And
what was that like?
I got the most powerful engine you can get. I launched it. It was me and my son. I launched it in my parents' backyard, right? Like, I'm like, oh, look, we'll do like this whole thing. Check it out. It's a really cool rocket. It's going to come down as a parachute. Dude, I launched it. That just was gone. And never saw it again.
That's funny.
It went up with such fury. And I was reading the package. It said like 1,000 feet in the air.
Wow.
I have no idea where that went. Oh,
That's
man.
funny.
Somebody walking around in Queens got hit in the head with a rocket.
There's actually a Simpsons episode where Homer hires his friends who are all like science nerds to build a rocket for Bart and Milhouse, and it winds up burning down the church. So I could totally picture this rocket crashing into St. Stan's and just burning everything up, you know?
Jeez, yeah. That'd be terrible.
Oh, man. Is there anything else you like?
SSPK, I was looking at. That is Weed Maps.
Yes. Cool one. That's a cool one.
Yeah, you told me about that one.
Yeah, why do you like that one?
Because weed is going to be hot. Hot. Obviously, we've got legalization going on all over the country. It's a big market. It's just going to get bigger. I mean, it makes sense that something like Weed Maps would be popular, you know?
And you get that software as a service offering too, which is always a hot theme as well. And right now,
yeah, I mean, all my SPAC trades are going to be short-term trades,
of course. Yeah,
and if after a month or so, like they're not really performing the way I want, or I don't like the environment or whatever, then I'm gonna cut them out. Those basically I trade with a stop loss.
Yeah.
Yeah, I have certain prices where it goes under a certain level. I'm like, all right, enough of this. And if it goes back up, that's fine. I don't care, because at the end of the day, what's going to make me money is like sticking to the strategies that I have overall in a long period of time. So,
yeah, and I've traded SPACs a similar way. I got out of laser in the mid 40s. You know, I wasn't going to bag hold that down. I got out of Open Door, IPOB too early. I actually should have held it. Open Door is a good company, but you never know at first how far something's going to go, you know?
Well, it's, you know, you need to build conviction to hold stuff. And if trading it's very hard to like, unless you, some sort of new information passes, you know, it happens to catch your eye or something like that. It's really hard to do DD on like everything you want to trade.
Yeah.
You know, sometimes it's just the right setup in the right moment, and you know, have a good feeling it's going to work out, and then it does.
Yeah, and the thing with SPACs is you have limited research that you can use usually. They give you the investor presentation, which is great, but if you look at those, it's like I have 105% CAGR over 5 years, and it's just like you're not making money until year 2024. Like you have zero revenues.
Yeah, and VIH was another one. VIH was another one. That's why I'm like, you know, I'll hold it short term, but literally they showed Robinhood's growth. They'll do the same thing. Like that's
right. It's like look at my
maybe. I hope so. But like I don't want to like be a bag holder hoping so. I just hope in general as a good human that you guys do well.
Right. Like I'm trading at 11 times EBITDA for 2027, and you know, Facebook's trading at this price. It's like, come on, man. Be realistic, right? Exactly. I feel you on that. Are there any other SPACs you like, or are you kind of just those two?
It's really those two. You know, I've been messing around with my cryptos a little bit. I shuffled around some stuff, took some profits. Uni's been on a tear, man. Yeah. Uni was great. The beginning of this, I picked a couple different coins that I was going to dollar cost average into. Uni is one of them. And picking up bags $2-3, man. It's nice. It's real nice.
I couldn't wait to hit the bid when they gave me that free money.
I remember, man. You had like it was like a flashback of 2018. You're like, oh, I have all coins. Like,
right. Get it out. Yeah.
$200 for gas. Fine. It's fine. Sell.
I legitimately spent like $200 on gas. And I was like, screw it. I'm making $1,200. Get out. You know.
So for those that don't know, to use so Uniswap is this automated exchange that is hosted on Ethereum. Uniswap it's decentralized, permissionless, so anybody can go and use it. You know, they can't do what Robinhood did, where they just limit your trades or like stop you from buying. No, like even if the founders get hit by an asteroid or something like that, like Uniswap is going to work as is right now. You know, it's going to keep going. It's alive and it lives on Ethereum. So to use it, you do have to pay gas, kind of, to sort of charge the machine. And so when there's a lot of volume, when things are hot, it gets a little expensive. And if you want your transaction to clear quicker, then you got to spend a little more money. is what we're dealing with when you look at any sort of blockchain, right? Think of the blocks that record the transactions as like a bus, right? There's a limited amount of space on that bus. So you could wait online, but also you could jump the line if you're willing to pay a little bit more. And so that becomes this cascade of gas increase, because especially during times where people really want to get out or really want to get in, it can get real clogged and you can be spending a lot of money on gas. So keep that in mind if you are messing with Uniswap and you are messing with these Uniswap gems, quote unquote. It can get very expensive to exit your position if there's some sort of panic.
Uniswap is pretty cool, right? Because you can I can become a market maker by providing liquidity, right? Is that something
there's over 70,000 liquidity providers or something like that. Did you see Hayden, the guy who made it, tweeted at AOC?
Love AOC.
Yeah.
Have you ever provided liquidity? Is that something you've done?
So I do ETH and DAI, right? So basically what happens is you need to put up an equal amount of both assets. So you put up $1,000 worth of ETH, whatever ETH is worth at the time, and then $1,000 of DAI. You stake both, and as people trade DAI for Ether back and forth, you get a percentage of the fee that they're paying.
That's pretty cool.
Sharing that with everybody who's providing liquidity to that liquidity pool, to that trading pair. So essentially, you're being a part of the exchange. You're essentially, instead of some isolated market maker that's in a suit that you have no idea who it is, it's the community itself is really providing liquidity to trade these pairs. It's pretty interesting.
So are there any risks involved with that?
Yeah, there's risks like impermanent loss, right? So let's say the price of Ether starts going up, right? When you go to pull out, if you don't pull out where you were at, basically there's a chance you could lose money.
Okay.
Right. I would do a terrible job like getting into impermanent loss because I barely understand it.
So, I mean, liquidity providing sounds like a really interesting idea. I don't know if personally I would ever do it because you need to own both assets, and that does seem like there is some inherent risk. But
you know what would be relatively risk-free is if you decide to do two stable coins, I would think, because there's no risk of one running over the other. They're both supposed to to $1, and they'll fluctuate a little bit. And as people arbitrage and get that back to $1, you're making money off the trades people are making to try to, as they're trying to make money, you're making money just by kind of sitting back and being a part of the system, which is really nice.
It's really awesome. And I think it's a big difference from what we saw with GameStop and Robinhood. And that's pretty cool.
Yeah, no, absolutely. And I think hopefully that's going to be the sort of future that we trend in. But who really knows, right? And then on top of it, they have that token Uni, right, which is a governance token. But I think when they release Uniswap v3, there's going to be some more utility to the token. And given the run that Uni just had, I'm starting to think that maybe there's something going on.
Do you think that they might do another airdrop? Like, should I open up another wallet and try and cash it?
Dude, I could have sworn I was eligible for the 1-inch airdrop. I logged in like 10 wallets. Nothing. Got nothing. I wasted a whole hour.
That sucks.
Drop.
Dude, if I would have known Uniswap was giving away money, I would have gotten wallets every which way. And I guess that's why no one knew, right?
Yeah, and that kind of speaks to the beauty of it, honestly. Like, the fact that we woke up one day and it was like, what?
It was a lot of money, too.
Yeah, it was like
$1,400.
Like $4,000 to $6,000 at points. But also, like, when we received it and I watched the price just took a huge haircut after that. We went from, what was it, like $6, $7?
Yeah.
I was like, listen, look at the volume on Uniswap compared to Coinbase, compared to Gemini, compared to other exchanges. Uniswap is crushing it. Everybody loves and wants to use Uniswap. So if the token's not valued that much in this moment, I'm sure it will be increase. It will increase in value in the near future, just because everybody is using this. And granted, there's no actual utility to the volume, but I kind of had faith, like you were talking about having faith in a good team. These guys seem like they have a game plan and they sort of know what they're doing, and I would not be surprised to see some sort of new utility with V3 coming out.
That's awesome. I might have to check that out on the pullback then. We'll see.
Yeah. I mean, it pulled back to like 14 just recently, 1460 something ish. Yeah, I had my targets from the beginning, and I've been taking profits at my targets, and I have position to ride, and it's been awesome, and I'm really happy that I was able to get into it, and I was able to get other people into it.
Hey, and that's what we do, right? Like when we tell family members or friends about Bitcoin at $5,000 or 10 grand, we're trying to help people out when we think we see an idea. Now we can't recommend anything, but we can say what we're doing, and sometimes family and friends listen, and other times they don't.
It's not easy to wrap your head around all of this, especially if you're not like approaching it from any sort of background in computers whatsoever. Like if you've programmed something, if you've seen like scripting and stuff like that, if you've only seen it on the periphery and you look at it, it looks like people are in the Matrix.
Yeah.
It looks super impressive. Like sometimes, a couple times I had to do something where I had to like go in terminal to like help somebody out. And they think I'm like hacking their computer. I'm like, listen, I literally just did the same exact thing that you did with the mouse. I just had to do it this way because it's all messed up. Wow.
When I told family about it, the only person who took me somewhat seriously was my brother-in-law, because he was like a tech guy, right? And he actually looked into it. I don't know if he ever got into it in terms of, at the lows or when he got into it, but he did get into it.
Nice.
And I think it takes a tech-minded person to be willing to take that risk at first. And, it's crazy. It's internet money. We talk about this all the time. It's just a code.
It's code, yeah. It's code that lives on the internet. It's has no employees, doesn't hire anybody. There's no boss.
Craziest part.
It's
There's
just
no
alive, and we interact with it, and it's incredible, man.
There's no creator. We don't know who Satoshi Nakamoto is. He can be a time traveler. He can be the government. He can be anything. We don't know. That's crazy.
Well, we do know that he's an alien.
And we know he's not Craig Wright, too.
Yeah. You ever see that dude talk?
No, I refuse.
Dude, I watched something the other day because I was like, what does this guy sound like? Bro, there's shit coming out of his ears. He is so full of it, man. Absolutely ridiculous. He's sitting there talking about, when I wrote the white paper and I did it. Dude, you didn't do that. Like, it's fucking obvious you're a liar. Just everything, the way you're talking, the way you're sitting, it screams that you're full of shit.
Give me the Big Connect guy over Craig Wright and
Carlos Matos? Bro, Carlos is doing well. I don't know if you saw our
he's like a harem going
conversation.
On right now, right?
Huh? Huh?
He's like a haram going on right now or something. I saw his tweets. He had like 5 women with him. I don't know what.
Yes. So I tweeted at him and back and forth for a little bit, and I was like, "Hey, Carlos, like, what's going on? Heard you're starting a harem, and just want to know how it's going." And he's very positive, very nice, like super sweet guy, man. He got back to me and he let me know his progress.
Speaking of which, we followed JC Peretz, and he's a great trader, nice dude from what I've seen on his tweets. And he tweeted the other night how he was making pasta with sauce, and he had a bottle of wine, and he had this jar of tomato sauce. And I'm like, I gotta tweet this dude. Like, what are you doing with a jar of tomato sauce, bro? Like, come on. You got a $500 bottle of wine, and using like Uncle Rao's, tomato sauce is ragu, like, come on.
Ragu.
You get yourself a couple of nice tomatoes. You get yourself some onion, some garlic. It's not hard to make your own sauce.
Yeah, no, it's definitely not. And there's really no excuse.
No.
At the end of the day, we have the internet. We have so many things, man. Just look it up.
Right.
You gotta subject yourself and your family to whatever's in some freaking jar.
Right.
What's in there? You don't know what
I've become such a snob because I'm a really good cook, and I'll say it straight up. Like, I think I can go on Chopped if I had enough time and win. I just won't have enough time in the time they give me to do it. But like, I love to cook. I'm good at it. If I go over to someone's house and they give me tomato sauce from a jar, I'm out. I'm not eating.
Yeah, I never had you cooking. I've known you how many years now? Like 20 years.
Well, you know what? You're going to DR. You're going to all these places. Get the vaccine, then you can come over. I'll make you a nice meal.
Dude, we gotta get to Peter Luger's.
I don't get the vaccine. I'm down.
Yeah, man. We've been going to Di Stefano's.
Where's that at? I've heard of that.
It's not too far away from Peter Luger's.
Okay.
And it's really good, man. Getting ribeyes, chilling, nice glass of wine.
Bro.
Missing. We can't go to Peter Luger's without you. We're waiting on you.
Bro, have you ever gone to Del Frisco's?
No.
Oh.
Amazing things. Dude.
Bitcoin hits 100K, we'll go to Del Frisco's. It'll be on Satoshi.
No. First, we got to do the so we had our initial agreement that
it's like 10 grand.
3 of us. What was it was all-time high, right? So it was 20K?
Was it 20K? I remember if it was 10 or 20. That makes sense.
Nah, it wasn't 10. It wasn't 10.
Yeah.
10 because it was already at like 12 when we were doing shots that time.
That makes sense, yeah.
Yeah. So it was once it hit all-time high again, we were supposed to go to Peter Luger's, drop some nice money on a nice steak and really enjoy our time and reminisce on the bear market. But we had to have a pandemic.
Right.
So we're kind of reduced at this point.
Dude, guys, on a serious note, we did start a fundraiser and our goal is infinite, essentially. If you find anything we do valuable, or even if you just have made money in the market and you can afford $1 to donate, please donate to St. Jude's. It's called the Pay It Forward Initiative. Our goal is everyone who's had a successful time investing or trading because of Twitter pays it forward, right? Our link is on our Twitter page at Satoshi Alien. Please donate anything you can if you can. It's not for us. It's for children who will need it. And we will never take donations ourselves. Any donations you want to give us, we recommend you send it to the charity because at the end of the day, it sucks that kids have to go through that.
Yeah. So 2 things. I mean, one, absolutely, we don't want people to suffer unnecessarily, especially little kids. And so anything we can do to mitigate that, I mean, let's do. Yeah. You can contact us at satoshialien@gmail.com.
We're not financial advisors, so we can't help you with, should I buy something? We can't do that. But we can help you with, how do I do something? And that's what we're here for.
The Satoshi Alien will help you understand technology and cryptocurrency like Bitcoin and believe you like it. The Satoshi Alien will help you understand investments and make money, so come listen to the aliens guidance. Listen to the